markets are climbing towards their February high and we're looking for trading shares. As Gary Glover's portfolio is 77% invested, we're looking to Gary to give us some insights into which trading shares he's picking up this week and where we look for the next movement in the market. Good morning, Gary. How are you?
Yeah, no, pretty good. Pretty good, actually.
So, I'm surprised partially to see just how much that NASDAQ has run, but you might not be so surprised. You were kind of looking for some decent movements in the US and you called the October lows to be a good 14 months. How are you looking at that movement on the NASDAQ?
Yeah, look, it's probably a little difficult here now because we're sort of, obviously, had a pretty good run, looking maybe a little bit extended there, but we do know, Chris, there, and I've sort of highlighted this so many times there, is that, that the average sort of rally there for, Dow and some of those US indices coming out of those October mid-term year lows, pretty strong moves there. So in terms of your 4-year cycle, your most bullish 2 months comes out of those lows, the most bullish 13 months comes out of those most bullish years. So in terms of investing every 4 years, if you would just sort of pick one period to sort of try and come in and get out, it would be the coming in October midterm year. That's just the sort of really potent cycle there. We've had a pretty strong move here. The reality is here that so far we're actually underperforming the average moves there for a lot of these indices. So those the bears that have been left behind here. What was a good phrase the other day, that all the bears have got left is their telephones. I thought it was a cracking phrase, but yeah, they still could sort of keep going high here. There's probably a few levels to keep an eye on. I know that just looking at some of the seasonality in these cycles as well, you sort of can get some congestion into August as well. It's sort of either sort of mid-July or mid-August there was sort of likely, but they don't always sort of go, the norm. If you look, I look through all the cycles there, and they can invert sometimes as well. So if you sort of, I noticed that mid-August was a low, maybe 2/3, 3/4 of the time, but there was definitely sometimes mid-August end up being a peak as well for just a short-term peak. So it does feel like to me everyone's looking for a pullback here. Everyone thinks it's due to pullback, so that means it might keep going. So it could rally through to mid-August here, which sort of supports our market, because our market's sort of come out of that 12-week congestion and then really kicking on here. And historically there, when they come out of those, in the past, they're like that 2017 went to a new high in 4 weeks. So that's a pretty bullish setup. So possibly we might actually invert there, maybe rally up into mid-August, and then maybe congest thereafter there for a period, and then maybe finish the end of the year strongly. So, but we're probably due for a consolidation at some point, just sort of whether we get something here now or pull back. But the reality is, if we do get a consolidation, Chris, history is sort of telling us they're really only sort of that 2 to 5% other sort of drawdowns in the second half of these third years. So we just, we're, this is definitely not, I mean, the amazing thing is if those bears out there, if they looked at the cycles there, this is, this would be the worst time to be shorting in the cycle. So it's just, you just do not sort of, if you're looking at cycles there, you would not be shorting from October mid-term year through to the end of the next year. It's just, that's when,
Statistically, it's the wind's not in your favour.
Historically, that's when you're going to get burnt the most in that period, which has been the case here so far. So we're just going to sort of roll with this market here at the moment. But all means, it looks like we'll probably roll forward here. I mean, the S&P sort of broke through that upper of the band there, so that's sort of interesting. So normally, I think last year we hit the top of the band and then we just sort of tracked along. Maybe we'll break above, maybe we'll just track along the top band there. So, but nothing too negative with that sort of setup, Chris. So, if anything, probably more positive than negative there. So probably, let's say it's, there's a few levels, just some old peaks there to keep an eye on, but feels like this market's sort of still going to continue to go high here. So, any drawdowns are likely to be small, I think.
Okay, so looking at the seasonality charts, it's not showing us a massively strong signal of a mild miles higher low or a acid top, but whatever it is, it seems like it's not going to be an aggressive couple of weeks ahead into the mid-August, maybe end of August scenario.
Yeah, well, you could invert here, so you could actually get something aggressive higher into mid-August. That's the possibility. That's actually the one that in my mind here, the way that's sort of where everyone's sitting, that would actually make the most amount of sense to me for us the market to accelerate here up into mid-August, and then maybe go through like a month and a half or like a month consolidation. So do something sideways for a month. Maybe you come back, 4% or something over a long period of time. So what would be nice there is that the old David Ryan there, go back to the high and consolidate for a period underneath the high, and then end of the year go bang. Yeah, that would be that'd be the nicest setup here. But yeah, we'll see what happens there. But just going to trade individual stocks here. But yeah, so the market's still pretty supportive.
Look, good point. Some individual stocks, and we'll jump to those in a second. Just to round out the large indices, the Dow Jones is behaving a little bit different, especially from the US perspective, tracking those overhead resistance lines. The S&P's resistance line is sort of like a 45-degree angle, whereas this Dow Jones has been overhead horizontal line and then it's cracked through it. So you did talk about a possible sort of inverted head and shoulders, how it mirrors in, comes back out. Let's look like it. What do you see now?
Yeah, that consolidation there, Chris, under the high, that 4 weeks ago, yeah. So that's what we want to see in the S&P. So we actually want to see the S&P go up, test the high there, even our NFX as well, go and test the high there, then consolidate for a period of time underneath the high there, and then something kick on. That's a really strong, pretty bullish sort of pattern there on the Dow Jones. And the fact that we've consolidated a few times under that high and pushed through, that's pretty bullish there. So Dow Jones still looks pretty robust there. Although we had a small range last week, there's nothing negative about that pattern. So it looks, Dow looks like it'll go back and retest that the old high there at least. But yeah, this stage, still very constructive across the board here.
Okay, which probably leads us into trying to find the best shares to trade. So you started off this week's report from the trading share perspective with Treasury Wine TWE. Now, definitely an export one. There's been a lot of political movement and impacts washing through this company over the last few years. But what you've got here is some Fibonacci, so 61.8% Fibonacci retracement. Just, you've got the blue line, so can you walk us through sort of how you go from the low to the high and how you end up with this Fibonacci number over here?
I think when you trade a stock well in the past, you have a habit of actually going back and looking at the same stock again, hoping that you'll be able to replicate the same positive trade you got last time. So this has been pretty good to me so far in the last couple of years, trading wines. But interesting here, we just sort of come back to a bit of a key support level, which is sort of, we've had a couple of touches there at 22. And it's had a pretty big, decline there. So whereas all stocks might come back maybe 2/3, 3/4 of the range all the time, quite deep retracements, but typically industrials, they won't come back more than say 50% or maybe 51.8% of the range. So there's a pretty large correction there on the weekly for Treasury Wines. So and the same level there is the Fibonacci level as well. And just starting to see volumes sort of just start to increase a little bit here at the lows there. So just some sort of constructive signs there that could see a bit of a low here. So just while I'm looking at there, I've actually sort of sold a few puts there, Chris, just to sort of give me a slightly better entry. I haven't sort of bought too much stock here, just because I sort of like to see, prefer rather than try and pick the low here. I'd like to sort of see maybe a high low sort of setup there, but definitely one I'm watching pretty closely here. Just feel like it's pretty close here. So whether there's another retracement in a high low setup here, but it's just definitely one we should be having a look at there. So, yes, it's still a pretty quality sort of company, in my view.
Well, if we move to another industry completely, we're looking at property, we're looking at PXA, we're looking at commercial contracts, looking almost monopolistic characteristics for this company.
Yeah.
This is a tight sort of range here. So you've got some sort of bandwidth, upper and lower limits, and it seems to be sort of compressing and really tough from a volatility perspective. That's sort of wider ranges, wider candles, wider days, tighter ones in here, but all in all, this seems a lot tighter.
Yeah, like 14. Yeah, so 14 weeks there of that sort of tight congestion. Like me, I do like to sort of see the sort of, strong impulsive moves and then more of a corrective decline there. If it overlaps and then the volume declines as well. So I like that. But the two things I like, because I really like that big volume on that 4 or 5 weeks up. So we definitely saw some really strong buying off that last low. And then it's been a bit lighter here, and probably the volume sort of come in near the lows as well all the time. So, just a corrective sort of characteristics there. So, looking pretty interesting there. So, some decent sort of growth forecasts there for PXA. They obviously they're looking to roll out the same, sort of settlement system here in Australia, into other markets there. So, that's looking pretty interesting there. Some pretty strong growth sort of forecast there. So, definitely want to look at it. I think it breaks out of that zone there. Probably, definitely sort of keep along. Like we know when they, like the market, there you stay in that congestion sort of pattern for a long period of time, that long base there, you sort of tend to pop out of it pretty hard. So I think it looks sort of pretty constructive.
Now, moving into another industrial industry, in the healthcare space, we'll start off with ResMed. So looking at ResMed, we've got this support line here with a fair few touches. So is that a strong play into how you analyse this chart?
Yeah, so I saw that little tightening sort of set up there early in the year, and then it sort of broke out of it, and so that looked pretty positive, I thought. The thing I didn't like about this first originally was that sell-off there sort of most recently, was sort of 6 weeks on the high. The volume on that period was actually probably above average. So that kind of made me a little bit, well, that doesn't look so, we want to see sort of rally sort of on strong volume and then pull back on lighter volume. That's the sort of the normal setup we want to see. So, but yeah, so that did concern me a little bit, but then we sort of saw a little bit of volume come in at that low off the first sort of hit, and then it pulled back on some lighter volume. So we just saw a little bit of a change in character there, pretty constructive. And then we saw some volume there last week and it followed through. So it's like, that's more like what you want to sort of see. So, still, but I just think this healthcare sector has probably underperformed here in the last, 12 to 18 months. And you would have thought that would have been probably coming out of COVID there, a sector which was ripe for a big bounce there. A bit like the travel sector for me is a sort of sector where that, should see big improvements there for the next few years. So I still feel like healthcare should see some big improvements to recoveries there. The next few years there. So maybe we're just a little bit, a bit laggy here on healthcare, but definitely a sector I'll be having a close look at here. Well, I definitely am looking at a lot of healthcare stocks and some opportunities across the board there, I think.
Well, that's probably a good point to move into the Ramsay chart. So looking at Ramsay, got, again, $84 is the high part of the chart, and then coming from 56, decent retracement, big volume spikes in the chart. But what I'm catching here on your markups is...
Yes, so we're seeing these big caps here, the last 18 months for us sort of being, big range bound and go back and retest old highs and retest, old lows, and there's been plenty of false breaks, marginal new lows there. So it's been a pretty good trading opportunities, just waiting for the sort of stocks to come back and retest old lows and even do the marginal. So at the marginal new low there, we've got a bit of volume there, so definitely seeing some signs of accumulation taking place there. So it looks pretty constructive to me. So I do have a position. Ramsay just sort of added to it, obviously, this week as well. But yeah, it looks pretty constructive to me. So use up a bit of time here, sort of trying to build a little bit of base here. So it looks quite good. So I like the sector here. I just think there's going to be a larger recovery there next year or two. It's just Ramsay's had the issue there was I think everyone was thinking the same as me, that was going to be a recovery here, but the last report was a little bit underwhelming. It's like it's sort of showing that there was an improvement there, but not as fast as I was hoping for. So that's the only sort of negative there, is it hasn't, haven't got themselves in full swing just yet.
Now, a different area of the market completely. We're looking at blue scope steel on the chart, and you've got sort of suggesting a bit of a tightening going up here. What we're seeing here is this is a massive bar here, big range, breakout over what you call, imagine B wave, deficient going on here. I don't know, how do these two match up?
Yeah, so we've been sort of trending up for a while there. All the pullbacks are pretty tight, nice in the consolidation there. Had a bit of a pullback here, a little bit of an ABC sort of in there. Nice and tight, the last thing on the chart there. And the whole price is sort of tightened up again. So again, just sort of like to sort of see that, consolidation there. Price nice and tight. And again, the volume was pretty light through that period. So just didn't see too much selling going on there, which is, weird. So when you see a consolidation, this is, probably a really important lesson for everyone who's learning charts and or just wants to be a better trader and stuff there, is that when you see a consolidation, when you see a bit of a pause in the trend, typically it will break out in favor of how it's traded into that trend. So, if you trade up into a move and then, impulsively, and then you go sideways for a bit, the odds favour breaking out in the same direction. And it's the same if you think about basically the market comes down and then goes sideways for a bit, it does favour a downward break as well. So just got to keep that in, in your thought process. You can see that this chart here, exactly. Look at that. You had like 3 consolidations in that trend, and they all popped up. And then all of a sudden we had an impulsive sell-off. Then you go sideways. Mate, that's not good. So then you impulse down, and then you had a bit of a rally here, but that was a bit of a grind as well, and then impulse again. So yeah, so just that's what you're sort of looking for is, good traders will wait for the consolidation and then enter, as part of the trend here. This is sort of like, you might be missing the sort of start of the move here, but it's sort of high probability sort of trading that coming in after it's already moving in its favour.
High probability trading, that's what you love to hear. Now, a final one from this week's report, similar in the commodity space, SLX, slightly different, looking at the SLX laser enrichment technology. This is quite interesting. We've got some lower highs going on here. You can mark this, and then something's going on here. What's happening in this chart, Gary?
Yeah, it does. Even the weekly chart too, for those that get a chance to have a look at the weekly chart as well, that'll show even sort of tighter consolidation, a bit similar to that chart we just showed there. So it'll be a bit similar to that BSL consolidation on a weekly. But we're seeing this sort of, VCP pattern there, Chris, so pullback, and then the next pullback smaller, and the third pullback smaller again. So the whole thing's tightening up. So we've got a descending triangle there. So we are just starting to sort of, pop out of that. The thing I like there is that that volume bar at the start of the year is sort of hiding the strength of the volume in the last 3-4 days here. So actually that volume has been a bit elevated. If we took that one out, that volume would look a little stronger there. But yeah, so we've seen some volume sort of coming into that one the last few days there. So pretty interesting there, just the whole tightening pattern. You do want to sort of see a bit of a break there of that what I call a little B wave there. But yeah, look at that, nice and tight here. So just sitting on the 50 there, which is pretty constructive as well. So saw a little bit of a shake yesterday. Looked like it was going to break up, and then got a bit of a shake out there. But this market's, maybe everyone's looking at the same pattern. The market wants to sort of shake a few people out here. But yeah, I just probably want to see a break above that large swing high there just to confirm that V-shaped sort of setup there. So
would you be looking at sort of here or here?
Yeah, so around 389 sort of would be good. I did get a little pilot buy, as Davis would describe it. Kept the stop pretty tight. But really I wouldn't be adding to this until I saw the go of the B wave there. So many times I've sort of come into these things and they might just contract a bit longer, or might break down as well, because they've still got a series of lower highs here. even though we've got a good BCP in there, even though the volume profile looks pretty good. But yeah, it's probably safer to wait for the break here. But, if you're like me, sometimes I like to get a little, snaky pilot buy just to sort of get a little good start there. But I'll try not to add to it until I sort of see something, really revealing there, and ideally really sort of breaking above the B wave is kind of my rule before I get serious about a position. I want to see about that level.
That's a good breakdown of a VCP, a good way to trade it, a little pilot buy, but also when to load up and be more comfortable with it. Obviously, depending on the risk reward of the trade. There are some good trades to work through this week. And any other insights to leave us with for the week, Gary?
Oh, no sort of great trading phrases there. I did sort of see someone was referring to trading as skiing, actually, which I thought was a good analogy. I don't know if it was who was telling me that. But the natural inclination that obviously when you're skiing is to lean back, which is kind of, ends up being disastrous. So, so really sort of buying the dips, can be a bit dangerous. So we really should be sort of buying with momentum there. So really that's sort of, we're looking for those sort of, good skier sort of leans into the hill. And, maybe a good sort of trader here will sort of, rather than try to pick lows there, you'll follow those strong stocks, wait for them to have a little bit of a pause. And then once they start to lean forward again, lean forward with the trend and go with it. So I thought that was not a bad analogy, actually. So do like that one.
That's a nice analogy. So I will say thanks for comparing trading to skiing, and I can see how that works. Well, thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.